everyone. Joe Vitale, American Retirement Advisors with the Gradient Investments Weekly Market Update for the week ending July 14th, 2023. Let's get into stocks. Last week, stocks indices were up strongly across the globe. The U.S. benchmark S&P 500 was up 2.44. The Russell 2000 was up 3.56, and the NASDAQ added 3.32%. Now, overseas, the developed market, which is the EFA, was up almost 5% at 4.87, while the emerging markets was up 4.96. So we saw a little international really leading the way. Within the U.S., the best performing sectors were communication services and consumer discretionary. The laggards were energy and consumer staples. We've seen this a lot this year. Small and mid caps outperforming large, and growth outperformed value. So last year was a little bit different. Value was stronger. This year the growth is stronger. Let's talk about fixed income. Interest rates declined last week with the benchmark 10-year Treasury yield dropping 23 basis points to 3.83% on improvements in both consumer and producer prices. So, and then we'll talk a little bit more about that. But let's talk about commodities. The value of the U.S. dollar versus other major trading currencies has declined since spring. The dollar now trading at a slight discount versus a 1 to 5% premium in the first few months of the year. And we're seeing that. Recently, we're in Mexico. Like, no, your dollar is down, so it's not as good as it used to be. The decline can be attributed to a slowing rate of inflation and reduced prospects for interest rate hikes by the Federal Reserve. Note that most commodities are priced in U.S. dollars, making them more expensive to us as the dollar weakens. So we're going to see more and more of that. You know, we're still seeing inflation. It is coming down, but things, costs of goods and services are still up. And here we go in economic data talking about inflation in June, which is below the consensus expectation. The consumer price index rose 0.2% month over month, a tick below estimates. Shelter prices accounted for 70% of the increase. Now, on a year-over-year basis, it declined to 3% from 4%. And core CPI, which strips out the volatile food and energy, also rose 0.2, which is a tick below what they thought it was going to be. Now, over the past 12 months, core CPI slid to 4.8% from 5.3%, but still well above the target of 2% that the Federal Reserve would like to see. So it is coming down, not as quick as they want to, but their increases are working to cause things to reduce. The wholesale price index rose a mere 0.1 in June versus May and 0.1% on a year-over-year basis, both below estimates. And the prices for May were revised down also, and unlike previous months, the price of services were flat in June, while the price of goods gained slightly. Again, more info. Let's talk about some company news. Aris Management Corp., which is a G50 holding, and Blackstone, which is a Core Select and G50 holding, rose 6.49% and 13.19% respectively. And shares were driven higher by remarks from CEO JP Morgan Chase, from Jamie Dimon from JP Morgan, and that's really what caused that. So also, JP Morgan is a contrarian choice and a G50 holding. He stated that the impact of tougher regulations on bank in the wake of recent select failures this year would aid large rival asset management companies, including Blackstone, who are very positive on their prospects for revenue and profits. We are seeing that play out this year as well. Also, CRH PLC, which is a G40I holding, rose 7.11% as the company approaches its listing of shares to the New York from London. Approximately 3/4 of its profits are generated in North America. In contrast, only 32% of the shareholders are based here. And management believes that the U.S. listing will be more attractive to institutional investors and help CRH benefit from large U.S. government spending programs. How about United Healthcare? United Healthcare has been a great stock over time. It's a Core Select, a G33, and a G50 holding. Rose 4.03% after reporting quarterly results that beat expectations. Management noted that an uptick in senior utilization represents pent-up demand post-pandemic and is not likely to occur in the commercial segment. Additionally, commercial enrollment has exceeded expectations so far this year and could benefit from changes to Medicaid reimbursement over the next 18 months. We've been looking at United Healthcare. We've had that in a portfolio for quite a while. We've owned it personally. It's been a good stock over time. That concludes this week's market update. Thank you so much for being part of the ARA family. If you'd like to get a hold of us, please do so at 855-756-5700. Visit us online at aradvisorsinc.com. Make sure you check the YouTube and the Facebook and get updates on the newsletter. So that's it. Hope you're enjoying the beautiful weather right now. God bless you, and we'll see you again next week. I might be out next week, so I will not see you next week. So you'll get the commentary, but I'll see you the week after. Take care.